All right, let's go. Okay, I think that we are probably alive here. I think we are now streaming. So that is good. Hello, welcome to the channel. Made a video earlier about something. I'll post that for tomorrow, but today wanted to go over a few things here. So let's see. We had a couple things I wanted to talk about. The first thing was the stock market. We'll get to that second, actually. But it was kind of a crazy day in the stock market today, so we'll go over some of that. But the first thing is what just happened tonight, apparently, is, apparently we have did some bombing in Syria. And it's kind of interesting because it's kind of like, as far as I can tell, it's been 5 weeks into the Biden administration, and already he's dropped bombs on Syria. Rather amazing to me. I find it just, it's just amazing. It's kind of interesting because I know this is one of the areas where the previous administration, the Trump administration, had tried to get us out of some of these wars, try to pull back some, and he just couldn't do it, right? He had Pompeo in there, and what's his name, the other guy, Bolton in there, and these guys would just not listen to him. He's supposedly the commander in chief. He'd be like, no, we're going to pull out of Syria, pardon me, and they just never really pulled out. And so, to this point, I don't even know what we have there. I mean, the rumors are that we've put more troops back into Syria, and so it would make perfect sense that we would do some bombing there. Now, of course, this all goes back to what? This goes back to, yes, there was a missile attack, and some of our people were injured and died, and of course this sucks. So it was a missile attack into the green zone in Iraq, and it's like, okay, I mean, at this point, from my point of view, it's like, how long are we going to be there? We're still there. I mean, what is the point? I really don't know. But I just find it amazing that, we've had, it's just the Democratic Party is just crazy to me. It's like they're the party of war now. It's like you had, I mean, back in the first and second Gulf War, you had GW was out there just like, oh, we're going to remodel the Middle East. He was just going to war with, everyone there just for the hell of it. These were wars that were convenient politically, and they were wars that seemed like a good idea. They were not wars that needed to be fought. And then in the Trump administration, tried to pull back a little bit. Unsuccessful because I would say the incompetence of the man as a leader. If you have a policy and you deliberately hire high-level people that disagree with your policy, why did you hire them? It makes no sense. And of course, hence, really the struggle to get out. And so I think if, depends on your perspective, if you're in the military, special forces kind of person, hey, you could probably going to be pretty busy. There's a lot of stuff. They're going to be doing a lot of stuff in Syria, the Middle East. So, hey, you got a job opportunity, but in the end, I don't know what good it does. I mean, I think this is the way I look at the Syrian conflict is that when the U.S. had pulled back, we had a situation where the Syrian army and Russia together had, pushed back on a lot of these groups and retaken various parts of the country, large parts of it. And if the U.S. is going to start doing bombing in Syria again, the consequences for this are devastating because it's first of all, you have the direct potential conflict of like, are we going to accidentally like shoot down each other's planes? And not Syria, but Russia. I mean, they're a formidable foe. Need to be careful. Secondly, all this does is drag out the pain. Like there's this illusion that Assad is this horrible guy, and you have to do anything possible to stop him and get him out of power. But it's a totally misunderstood and misconceived thing. It's like, look, anyone at this point extending the war, anything you're doing that's going to extend the war, you're just leading to more children's death. I mean, it doesn't matter who's in charge of Syria. It's not relevant. It's just a matter of like stopping the war. You're going to start bombing in there, and that's going to give basically these whatever terrorist groups, some room to breathe. So they're going to go busy and do their stuff. I mean, it's just a mess. And so I think that people that think that Assad is such a bad guy and that he has to be removed at all costs, I think you're just in denial of what the real cost is. If you that's the point is, like, what is this administration going to do? Or is there intent to, like, look, we're going to ramp up the thing in Syria? Are they going to go with no-fly zones and all that? Think about the consequence of that. If they do no-fly zones, something like that, give me a freaking break. Those terrorist groups are going to reform. They're going to, like, start taking over cities again. It's going to be a disaster for the people of Syria, for the people. And they're going to suffer immensely. And you will have this thing happen. Have women and children dying again. It will ramp it up. And it's just a very simple thing. War is war. And I think in the West, and especially the U.S., people don't understand it. It's not a video game. There's an element of just stopping a war with no one winning a dang thing is still a good thing, because, like, there's a cost. You can't stop it. I mean, we have this illusion that we have this surgical, like, bombing and all this crap. It's like a 1,000-pound bomb is not a surgical thing. I mean, it's just not. You're killing civilians. There's no way you can avoid it, especially in these places. So we'll see what happens. But it just, to me, it's like, it's not a surprise that Biden, who's really Obama number 2, going to have Hillary in there somewhere. I don't know where she is, but she's going to be around and just going to, like, you can just see he's going to ramp this whole thing up. So it's just terrible. And if you're sitting there and you're one of those people and you're like, hey, he's a bad guy, we got to get rid of him. If you're just buying into all that stuff, I mean, I would just suggest that maybe get some other sources of information. When you start really looking at things like the UN reports, you had this engineers report on the chemical weapons. Were chemical weapons used in the past? Yes, I think it's very clear they were. Some of these, though, were done by other groups, and the last one was not chemical weapons. And the engineering report was suppressed, etc. You can go to various places, Duran, to get the information on that. And then what will happen is if you go to actual news reporting places, you can go to multiple places and they come up with similar conclusions based on the data. So, I wouldn't be so confident in what your opinion is about this subject. And I'm not either, right? I'm not either. Look, I mean, yeah, okay, some of our people died, so of course that doesn't make me happy about that. And but the reality is I don't know. And if you're watching MSNBC or CNN or Fox News and you think you know, well, you don't know either, and that's the problem. So okay, so that's it for that. So let's go to the stocks. Let's go see what stocks are doing here. Hopefully I'm still streaming. Yeah, I think I still am. Look at that. Not receiving enough video. Okay, great. That's good. So yeah, so this is going to be a really slow stream, I think. Yeah, so today in the stock market was really a disaster in many ways. So looking here at the S&P 500 ETF, the SPDR, yeah, this is a really heavy volume selling day here. Really heavy volume selling. Very serious. A big down bar. And see, the setup is kind of interesting here, because what you had this 2 days ago, you had this, like, pull off the moving average. It really came up pretty high, and then it went up the next day, and then today it's given almost all that back. So it's kind of really turned around. So now let's look at like the NASDAQ, see what the NASDAQ did today. Yeah, the composite. So this one, see, the Nasdaq kind of, is doing worse. It's weaker, right? So this correction that you had 2 days ago that did recover, get above this red line, the 50-day moving average. But the thing is, it pierced the moving average as opposed to the SPY, which really didn't. And then it came up, and now we're closed below that 50-day moving average. So this is, this is sort of like that potential trend change is going on right now. Definitely in the short term, the trend is now, bloop, it's flipped. And it usually, it's at the same time that that's happened, are you getting oversold? Probably not yet. I mean, if you look at the stochastic, it's not necessarily oversold at this point. It's just in this middle range. So that was kind of a mess, a mess. And so now let's look at some of the, high volatile guys. So we have our GameStop here. So, it had that huge move yesterday, and today it gapped up again, huge move up, but then it just reversed. It just immediately, with this black bar means that it opened up here, I think, and then it reversed. Yeah, so it opened at 169 and it closed at 129, so it gave up 30 points on that day. And but the thing is, the close was higher than the previous close, so that's why it draws it as a solid as a solid black bar instead of an open bar and instead of a red bar. So whatever, that's how they do it in this one. But but then it came back up and it broke out, but then it couldn't really hold it. So this looks for GME, and once again, I saw some streamers out there just doing buying and stuff today and various things, and I that's short-term thinking, because this today was this after hours, it didn't really move much more. But one thing I want to look at, Tesla here. So Tesla, it sold off all day. So this is today here, sold off. It really closed near the lows of the day. I mean, it did cover a little bit, but then it kind of went down more after hours. Out here after 7, it just even went down some more. So that kind of points to like a bad opening tomorrow on Tesla. And if we look, CCIV, let's look at that one. CCIV, I want to go to the daily chart here so I can see this. That's not the one I want. I want the 3 month. Okay. Yeah, and then this guy here. So this is, this CCIV, this thing is another, the guy was buying some stuff in here, and then it's down, and then it's still down, and I don't know what people are doing. I mean, it's very difficult to do anything with that. I want to fess up to my FedEx. Look, I just got out of this thing today. I did lose money on it because basically it came up and then it just didn't go because the market imploded basically on it. So I just have to get out of the way. So this is a case where, you may have technically had what looked like a reasonable time to set up, but the market forces, the overall market forces came in and hit it. And so it just blows up your trade. And since I'm just entering a position, I'm not waiting around for that stupid thing. And then let's go to Peloton, which, once again, in the big scheme, Peloton got hit for 6%. So once again, I took losses here too. See, I had bought it 2 days ago on this hammer. So this green bars, it looks like a hammer, right? And the bottom wick bounced off that moving average, one of those moving averages, whatever that one is, 150 day. Okay, that doesn't mean anything. But the thing is, I bought it because I kind of put the buy price a little too low, and it just ticked up, filled my thing, and then it kind of, the next day went down, and then today it got hit again. So that one, I just took a loss on that today for sure. And I'm just out and just, reevaluate later on that. Then our Bitcoin crap, the grayscale kind of took a big down day like that. Still kind of an uptrend, really. And then I want to look at Tesla again. So I think, once again, the Nasdaq was kind of taking the beating today. Tesla, I did get some puts on this today, just because, if you look at this, see that we're kind of zoomed in, but you can see the 25-day, the purple line is rolling over into the 50. It's rolling. So we're in the midst of a trend change in the short to medium term, the 50-day moving average, 25, 50-day, you know, short term. So this is kind of an okay setup. We're like, look, it breaks through the average, and then it finds a low, and then it comes up, and it sort of fails before getting back above the 50 days. So that would be like if you look at your technical analysis books, you know, you see that that's a potential setup because, and of course, a setup can always fail, meaning that it can change its mind and reverse and go up, or it could continue to go down. You don't know. But see, Tesla looked like a good setup, so I did have some of that. See, because, you know, you look here, here's this thing coming up. If you look here, the purple line, which is the 25 days, always above that. And then it, you know, went to consolidation, and they just kind of touch each other there. And then they, boop, and they opened up. And now they're coming back down to trying to touch each other there. So it's definitely... so what's happening is this isn't really like a trend change per se, but it's going into like, at a minimum, would be like a consolidation. So if you look over here, you had these huge moves, and then it just, boop, it really just moved into consolidation, which it then broke out from and went up further. So, yeah, and I think the, you know, the thing they're talking about is the 10-year. And I think if I go out to a larger weekly chart, yeah, so this is like a max weekly, so we're going back to the 90s. So you still have this downtrend in 10-year interest rates over this whole time. So in the really, really big picture, you've had this. Now, one thing I'll just point out, look at this here. You have this, hit this low here about 1498. Came up, but like this is years and years. In 2012 it hit a low of 13.66, and then 2016 13, it hit there again, so that was a floor. And then here we hit it again in 19, and then it came up, and then it broke through. So this is a really, really good example of resistance, of support turning into resistance. Well, we don't know that yet. So let's go back here. So this is a long-term chart. You have here, over here, you hit the same point. It goes back up, so they have support. So they're really supporting it at this 1.5%, I think that is, 1.5% on the 10-year. And then here it found support. Then it came up and broke right through. So what happened at this particular point here in, I believe in January, February, what's really happened is this support in this 15 range, you can just see it here, right? It broke, and it just went down. And now the question is it going to come up back through? See, now, even though the interest rates are going up, they're hitting this resistance. Now, once again, resistance is what? Is resistance a hard ceiling? No, it's a soft ceiling. It's a ceiling that you can, you know, you may hit it, and you may bounce back down, or you may go off. And so that's all this is really trying to show here with this line. You see that you came down, boom, 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 but now that you broke through, now it becomes resistance. So that's like in the long term, we've had this really big run in rates here, right? So from July, rates are really moving up, but it's important to kind of understand that it is hitting resistance there. And so now just go to maybe a shorter term chart. You can see that, well, what's interesting here, see, we've had rates going up, the 10-year rate going up, and we could do some drawing of channels and stuff. But what's interesting here, so let's draw some trends. You can kind of see a trend line there. And then we have another, so we have a channel. And you can see that we busted out of the top of the channel. And see, the interesting thing about it, see how it busted out of the channel, but then it kind of like sold off. So as you can see with these things, it's kind of like you've had such a strong move that, you know, for it to pull back, it seems very reasonable. So the opposite of pullback is what? Is for the price to go up. So you can kind of see that you sort of like theorize like what's going on. Well, today, then what went on? So you can kind of theorize that, hey, the rates started to spike up and the market took a hit, And in response, people started running to bonds. So now let's go to a 5-day chart. Let's see. And what I'm going to try to do is I'm going to try to put the SPY in the background of this thing. Price. And come on. Stupid thing. Price. And I want to put it behind price. Okay. And I just want a solid thick line. Make it a color that will stand out maybe. Purple. Let's try that. Okay, so there we go. So now trying to summarize what's kind of happening here is we see that yesterday, like, look, this purple line, which is the 10-year, which is the S&P, and the bars are the, the candlesticks are the 10-year. So what's interesting here is over here, the 10-year really spiked. Look at that thing. It really spiked up. They lost control there of the yield on the 10-year. And what's interesting is, like, it started to go up, and it went up, and then the market is kind of responding to this. So the purple line, the market is going down. And then, stupid thing. And then, okay, the yield starts going down again, but the market is sort of selling off. And the market just keeps selling off. And then as you get to this spike low in the market, this interim low, you see this kind of spike in bonds in the yield, which implies that there was a bunch of buying in there. So I don't know, I don't know if, was there a market operation or something? Did they come in there and just kind of like, did they see this price of this thing pop out like that and they come in and just buy a bunch? Some hidden force, the Fed or the plunge protection kind of try to save it? And then they brought it down, and then, it still closed at the high of the day, just ignoring the wick. Let's consider the wick of either there's a bad print or it did get out of control. But it was sort of, the indication would be that maybe it did get out of control, because that's why the market sold so hard. It sold so hard, and then down in here, it, gosh, what is that? It just got really out of control. See, there's got to be a delay here, right? There's got to be a delay in terms of getting money into the bond market from the stock market. So you can imagine money's coming out, and then at some point it's like, oh, we're going to get into the bond market. So this is kind of like the way the trade-offs are, because what happens is you can make this argument, and I know they're talking on financial media, where like, hey, rates went up and it spooked the market, the stock market. And so it's like, well, wait, rates are going up, people are selling bonds. So what are they doing with that money? Well, normally maybe they would put some of that money in the stock market, so that would be bullish for stocks. But the problem is, if it goes too far too fast, then it makes entities worry. And why would it make it worry? Because if the 10-year is a real rate, it's the rate that will tie to a lot of the consumer debt out there. So as this goes up, you can expect mortgage rates to go up, car loans to go up, etc. And so the idea that people get 30-year fixed, but the average person holds a home in the 7 to 10-year range. Cars are not quite as long normally, but now they're starting to. If you get a 3 or 5-year mortgage, the 10 years kind of a measure of that kind of rate. So this is a rate that's a real practical rate, right? It's a real practical rate and a proxy for what consumers are going to see. So when it starts moving up in here, that makes people nervous. So I think, so what I had done today is I had really just, I think I did a little gambling today, so we'll see what happens. I got a little Tesla puts, not at great pricing, but my expectation is that I think we're set up to go down. Now, if we don't, then I'll just take the loss or get rid of the put. That's fine. And then GME, I bought a put. Now, once again, I had talked about how we have these really high implied volatilities, so these are expensive. This one is expensive. But I'm just looking at this thing, and you just look at it, and I guess, let me do this. Let me just show this right here. Two things to note. One, this gap down here, and then these are all fairly continuous days, gap up. Look at that. See how that's in that gap? So this gap down is now resistance all the way up to 226. So this thing is fighting against this resistance in this gap. So that's kind of a tough call. Okay. Secondly, when you look at it and you say, look how fast it moved up. I mean, this is not financial advice. Go see your own broker, do your own thing. They're professionals, blah, blah, blah. Go talk to them. This is not financial advice. This is only things that I do for the fun. All right. When this went up so fast, I mean, I'm just looking at this saying, look how fast that went up the volume. And I'm just looking at it saying, wow, that was a coordinated effort. There's no volume. There's nothing going on all day. And all of a sudden, they cranked the volume from the volumes down here at 2 million shares. Yeah, 2 million shares. They cranked the volume as high as 10 million shares in a bar. Like, it's just crazy. So my point being that, I mean, are these, that's what the theory is. Like, are these people really going to try to hold this through the weekend, especially after today's action, which was, yeah, they're still up. They're still up, so that's good. But, man, there was a lot of selling today. So I don't know. I'm betting that people are going to be like, I've had enough fun. And do you want to hold it for the weekend? You want to see what happens on Monday? There is this dynamic, when you get to a Friday, like a lot of stuff can happen before Monday. And, so talking about my previous video on weak holders and strong holders, you ask the question yourself, like, are all these people that push this thing up, let's use these numbers, right? Hey, you got like 2 million, 2 million, 3 million, now you got 6 million, and you got 10 million traded and bought these shares at prices between $50 and $90, and now, yeah, they were up, depending where they got it. Matter of fact, most of these people got it at most of these people got it somewhere between 60 and 85, and yeah, that's cool. They're up $15, but look, it dipped down to 100. Yeah, maybe they're up 25, $15, but it's kind of a rough day. When they look at it in the morning, they're like, yay, when this bar opened up, oh, this is really good, and then it really kind of didn't go too well. So, these people want to wait around to Monday morning to see what happens. I don't know. So, yeah, I think that's it for this one. So, peace to everyone out there. We'll see what happens tomorrow in the market. Hopefully there's no more bombing of anywhere. So that's it for this one. Bye.